Hello everyone and welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live training session. I'm here to educate and inform you on the proper use of Hawkeye tools on the live edge of the market. If you have any questions or comments, over on the right hand side of your GoToWebinar control panel is a questions pane. Please enter your questions or comments there and I'll be more than glad to get to them in the order that they're received. If I inadvertently miss your question, please repeat your question just in case it's important, and I'm sure all the other members in the room will appreciate any questions that are presented. Remember, the only question that's dumb is the one that's not presented. Just keep that in mind. We are here for educational purposes only. We are not investment advisors. We are not investment advisory service. We are not registered as an investment advisor, so we cannot give you advice. But what we can give you is education, high quality, good, leading edge education. I want to make sure that you consult a competent financial advisor before you start investing money in any of these markets. And make sure you use common sense when you're trading. Don't start trading with money that you can't afford to lose. There's a large amount of risk in trading in any of these markets. Futures, Forex, stocks, options, equities. Make sure that you understand the risks involved before you start trading these markets. And make sure you don't trade with any money that you can't afford to lose. Make sure that you never, ever, ever, ever trade in a live trading account until you have first proven you can consistently and profitably trade in a simulated trading account with a proven trading plan. Okay. I'm getting pretty good at that. It's almost memorized by now, but just got to make sure and let you guys know the risks involved. We'll get down to brass tacks here. I am here to show you the full suite of Hawkeye tools from Hawkeye Volume all the way up to our Hawkeye Scanner and all the tools in between, including the trend and stops, the volume radar, the Fat Man, the Fat Boy, the KISS, the tool sets, which include the radar screen and market analyzer, our Hawkeye zones, and of course our levels tools for profit taking. So if you do have any questions about any of the tools, make sure you let me know and ask your questions. If I don't receive any questions until then, I'll just be looking at the markets. I'll be analyzing the markets with my tools. I'll be showing you the existing trades or the current setups and trades that were executed this morning, and then what we're looking at moving into the day. Make sure before you take a trade and any time that you're looking at your analysis in the morning, always consider the market news. Always look at a source to determine what news is coming up and if it's going to affect you or not. This morning there's a lot of news coming out. Today is a big news day, so you always have to take into account the news that's coming out. 10 o'clock today, there's going to be, let me pull that up for you just to show you. That way we can make sure that we're all on the same page. And here is the Forex Factory, which is my go-to source for getting impact news information. This morning you can see that 8:15 we had the non-farm employment change, which was very positive. They were expecting a huge amount before. They saw a big drawdown from that, and we were actually even better than that. So that's good news. Okay, we've got 10 o'clock ISM non-manufacturing PMI reports. Crude oil inventories out at 10:30, and then at 2 o'clock today, FOMC and the funds rates. They're expecting the funds to remain unchanged, but there can always be a curveball thrown in, and anytime the statement comes out on these dates, it always does causes the market to pull into a pause and it becomes kind of choppy and range bound. So we are always watching for these types of events. So I typically don't like to trade during normal business hours on FOMC days. It's just tends to be choppy, range bound, and really difficult to trade. But I'm not completely, I can trade, I just don't usually. So this morning, as a review from what we're looking at, you can see crude oil has given us a couple of entry signals. The first one that I saw came in just a little bit after 7 o'clock this morning when we saw a turning point and volume was leading the way into an initial setup. Right here you can see the initial setup, double dot sell signal entry that came in right here. If you turn your levels on, you can see the execution of the trade. You can see where the initial trade entry point was, the amount of risk I was willing to take in this trade relative to the Hawkeye stop. And then here you can see a 1 level and a 2 level and a 3 level of risk associated with that trade. Now, following my level rules, I was able to take a 2-level profit target because I saw the extension to 2 levels, and because this is a news day, I was willing to take less than my normal profit target, which is a level 3. So I took a level 2, held the remaining until I was stopped out at break even because I was waiting for the level 3. Then as the trade continued, the Hawkeye stops kept into the trade, and I was looking at the corrective line. And as that corrective line broke with approving volume, notice how the volume on 2 of the 3 time frames were in line with that price break of this trend. Then we can see that the acceleration of price started to come in from there. Then we got a secondary signal right here to sell into the market at that point. And when I saw extended volume, which is opposing volume, look how large that volume bar is. Let me pull this up just a little bit so you can see that more. See this volume bar right here? See how large that buying volume bar was, and see how price extended to new lows with the pivot? That was my signal that the downward push, like this one right here, was almost over. And so I went ahead and took my profits off the table. I didn't want to hold. I just took everything off the table at that point because I saw that price was starting to shift, and we're starting to see that there's not much more downward pressure. So I did leave some money on the table, absolutely, but I was able to preserve my risk and the profits that I did have, and I was not willing to take any more risk in this trade simply because of that volume bar. Now that's how I trade because I've seen more often than not that when I get a price bar that extends into new lows like this one with a pivot and opposing volume, I typically get stopped out. So that's why I went ahead and took my money off the table, and I'm waiting for a new entry signal to get me back into a trade. Does that make sense? That's how I traded that this morning. So it's a very simple setup. I'm using a 3-minute with a 6-minute and a 12-minute, and I'm also confirming with a 60-minute. Now, if you notice, the 60-minute is coming down into a aqua zone on the for support. That also is another reason for me to take profits off earlier rather than later. I'm not expecting home runs when I see price coming down into support. A very, very good chance that I can come all the way into the mid-range of this zone. But because we are coming down into a region where prior support or buyers have been known to be, I take my profits at a much quicker rate and then wait for the price to confirm. And as you can see, once we got down into that range, price has tested it several times, but it still isn't really pushing through. I could have gotten maybe eight ticks instead of 4. But on this first run, I was able to take 18 ticks. On the second run, I was able to take 4. So 22 ticks on the crude oil is nice. That's $220 per contract, and that's a nice trade. Looking at the setup, I followed my rules. I did everything exactly the way I was supposed to do. Even if I was stopped out with a loss, it would have been a successful trade because I followed my rules. And I executed it with precision. And that's the idea. And that's what we were trying to look at. And that's the idea behind that. See, notice each one of those new price bars that extend down are coming in with green buying volume. You see that? price extension buying, price extension buying, price extension buying. So you're seeing a lot of volume. These volume bars are higher than the average volume coming in. All the buyers are seeing this as an attractive range. And we can also see, if we're using the zone rules, this is an active money bounce. Active money bounce. That means that when price comes down into an aqua zone, the first time it's the highest probability reversal point. So we're watching for this to be a bounce of reversal back up to the previous zone of opposite type, which should put us right back up either into the 48.10 to 48.20 range, or if it's a strong bounce, then we would expect to see price get back up at least to 48.60, if not back to 49.20. But with today being crude oil inventories, anything is possible. And with FOMC this afternoon, again, anything is possible. So right now, that's what I'm looking at. And if you're to be trading this with the tools are quite simple. We have multiple time frames because we understand from our teachings that the 6 ways the market moves is the predominant indication for market direction, where we're going, where we are at now, and how we trade. Following our 3-step entry-exit method, we safely get in, we manage our risk, and we safely exit. And even if we take a loss on the trade, which is expected, we always expect to take losses because it's just part of trading. And as long as you accept that and know that that's part of your trading plan, then you'll know that in the long run, you're always going to be consistently profitable because you're always following limited risk, maximum reward potential. So that's the game plan that we're playing out here. So following this plan, take your trades as they're presented, minimize the risk whenever necessary, and take your profits whenever the new risk presents itself as well. A new risk event is either a volume extension, price extension with opposing volume, or a impending zone bounce. And here we're getting both. We are seeing a touch of a zone with buying volume supporting it, and that's exactly what we expect to see. Longer term, let me pull up a longer term chart here. Let's look at the longer term crude oil. Crude oil on a longer term, daily, weekly, monthly setup, you can see how important volume is to even a longer term chart. Prior to the big drop, we saw a big range of consolidation, 6 ways, of course, following 6 ways the market moves. We can see price extension right there with selling volume coming in, no demand, no demand. A lot of information right here telling you that there's some impending pressure to the downside, and there's not a lot of upside potential. With that, you can see that the first push down with larger than normal volume and then a huge sell-off of selling volume coming down gave us the indication of the direction. And once we got into our lower support zone, buying started to come in. These price extensions with buying volume are key volume bars that you need to be aware of and that you can use to help you to take and to manage these trades. As the corrective move came back up and we were failed to make a new higher high, you can see that we were able to hit a previously enabled zone. And once we hit the zone, notice the nature of the volume. The volume went clearly from buying volume to no demand. So all the buyers in the markets tended to dry out. And once they dried out and price started to go back off again, you can see very low, no demand volume. So buyers just basically went away and said, we're not here. Sellers weren't even trying to test that because the volume was extremely low. But once the sellers did come in, boom, very responsive, selling. The overall trend on the longer term is down. So you can see that the response to the price action is going to be down. Weekly, same thing. We're in a downtrend on the weekly and the monthly, so we're back in line with resuming the existing trend downward in crude oil. So looking at the intraday charts and trading the intraday time frames, you can see that taking the downward moves is going to be rewarded much more than taking any corrective upward moves. You don't want to get run over by the bulldozer when you're trading against a crude oil trend. And volume is always going to be there to show you the way, because anytime you see volume starting to give you an indication of where the market intent is, you always want to be ready for that. Okay? Always be ready for it. David, I did have a good vacation. Is that corrective line something new or just something you've drawn? It's just something I drew manually. All I did here was I connected the trend of correction, and what this had done previously is that prior to this pivot low here, I was following price right there. Okay, so you notice how price came back up and then it came back down and then it rallied back up again. Well, once it broke here, notice the color of the volume didn't change. So this looked like it was just a wave correction of a correction. So I was able to take this pivot as my new corrective trend. So pivot to pivot is the ideal location for any corrective trend if you're going to be drawing one. And here you can see there's a nice corrective trend here that was broken with selling volume. Here's a nice corrective trend. Now it was finally broken with selling volume and it continued to rally from that. So those are your corrective trend lines that I just like to draw. There's no rhyme or reason to that. It just helps me to see when the correction looks like it's starting to end. You can see that price is double topping. We're coming very close to the Hawkeye stop, which is high probability resistance. The automatic trailing stop painted by the Hawkeye trend indicator shows you a very strong resistance or support if it's green, and I use that to help me to gauge this type of corrective action. So this trend line and this stop gives me a really nice pattern, flag pattern for looking for this to be a continuation one way or a breakout in the other. So good, I hope that makes sense. That's how I use it. All right, notice that I got another double dot sell signal right here. I was obviously in the middle of starting the webinar, so I didn't even consider it. But looking at it right now, seeing that the signal was given inside of the congestion range. Also, it's not really congestion, but it was given inside of all of the pivots. So when you start to see cluster pivots like this, where you see highs and lows forming in an area, this is forming a market value area. It's a very short-term value area where price is staying. So when I don't get price breaking out of that value area, these signals are extremely weak. And even though the signal itself was valid, I would not have taken this unless it was a very strong signal breaking the low of this value, local value area. So I would not have taken this anyway. And I can see exactly here now why 1, 2, 3 buying volume bars that are contrary to this signal, which gives me confirmation that that was a good decision and why I had taken that. Hope that makes sense as well. Based upon the fat boy here, the white line I'm showing you right here is the crude oil. So I'm looking at the relative strength of crude oil to all the other markets, and I'm looking at it as an oversold or an overbought condition. So this gives me a good correlation with the other markets, and it helps me to measure the overbought or oversold nature. Right now, it was almost oversold. But at this point, it was still there. We're right back into fair value, and now we're on a very sharp trend of building strength back up into crude oil. So if this gets back into this range, just about 75% or so, then that is where we've seen it correct back to before it continues its cycle down. So we'll be watching for that. Right now, with crude oil inventories coming out here in half an hour, I expect it to stay range bound for the time being until we get that news. So Hawkeye volume, as I'd said before, is still the key for what we're doing and how we're applying our analysis and our trades to these markets. We were looking at shorter term time frame crude oil market. Hawkeye is not limited to any market for that matter, but we can apply these exact same methods, entry rules, exit rules, trade management to any of the other markets and to any other time frame as well. So if I were to go over to any Forex market or to a equities market, daily, weekly, monthly, I'm still going to be looking at the same setups and the same information. Are there other questions? I'm going to change screens real quick. And I'm going to throw up a quick poll here because I want to find out how many people in this room are here for the very first time. So let me pull that poll up. All right. Just real quick, of the people that are here, I just want to find out because I want to know if I present the information that you're interested in, and I want to make sure I keep this focused on our audience right now. Okay, I'll give it about a minute or so because I want to, based on that, I want to give you an offer to get started with Hawkeye and to apply this. And I want to also remind those that are members in the room that we do have some really good specials and upgrade discounts available in the membership area. So if you have the volume starter package, or if you have other packages and you're looking at upgrading, there are some discounts to upgrading if you apply those in the membership area. So let me go ahead and close this, and I will show the results to you now. There you go. So we see that about the largest percentage of you are current Hawkeye Professional Package owners. Another over a third of the room are already owners, where you own one or more of the tools that are here. And about 20% of you are currently new. So that's a good enough number for me now. So I'll go ahead and hide that. And we'll go back to our presentation. I want to make sure and show you something that why I believe that volume is so important. Volume is really the only leading indicator in the market. Okay, it signals price movement before it happens. It's the only indicator that signals the intent or direction of the market, and all the other indicators that we look at that you probably use are lagging indicators because they really don't have any predictive nature inherent to them. And when you couple volume with triple time frames, then that becomes the key. Okay, so looking at volume, if you're looking at what we do with volume, in a nutshell, volume price analysis looks at the typical volume spread analysis. We're looking at the overall distribution of volume, the overall profile of volume on every single price bar. And then we couple that with what we believe is really the most important part, is the open, high, low, and close of that price bar rather than just the high and low only. And then based upon that distribution and the location of the open and close bars, we are able to determine with a high degree of accuracy the presence of aggressive buying or aggressive selling in this market. And we can determine institutional bias based upon that. So when you see a red volume bar, we've taken all the hard work out of it and made it very simple for you to be able to see red volume is telling me I've got aggressive sellers in this market. I need to be looking to the short side. Or if it's green, I have aggressive buyers in this market, and I'd be trading based upon that. We also have another color that's white. Hawkeye volume shows a white color also that shows neutral volume. So a real quick example of that is this 5-minute chart from the S&P, where you can see that on the market open, you can see very large volume coming in, showing the reactive price, but you always see that on the open. But what I see is significant, and what I continue to point out is that when we see these volume extensions, price extensions with confirming opposing volume, that tells market intent. That says that the sellers are aggressively trying to trap retail traders at the high of the market and pull down very quickly. And that's exactly what we're starting to see. When you see the price rally back down, and then you can see a very weak attempt, okay, at buyers trying to come back in again, it's very quickly brought back in line with an increase of selling. And you can see the selling is much more responsive than any of the buying. And then any buying that you see at this point, okay, is seen with declining volume or non-stable volume. You can see that as the price gets higher, the buyers just dry up, okay? But when the sellers come in with confidence. And then when you can see the consolidation range and price last attempt, you can see that there's a last attempt at trying to break a new high, but you can see it's still just a lower high, no volume. And then you see the sellers starting to come in with larger and consistent volume. That tells you the third end of the story, is that you've got extremely high volume starting to pull in, you've got volume momentum building, and you have aggressive price action following. And all of that was preceded by volume. Volume always telling you the way. So that's the important part. I want to make sure that you understand that volume really is the key, and your understanding of volume is the most important part. So based on that, very quickly before the news comes out, I want to give you guys, 20% of you guys that are in the room right now, a chance to take advantage of this today. We normally sell this for $360 in our store, but I want to make you a very sweet offer right now. To get this Hawkeye Volume Starter Package, you get the full access to the Hawkeye tools, the Hawkeye Volume, the Volume Radar, the Volume Paint Bar, and our bonus tools, pivots, and wide bars. All 5 tools are part of this webinar offer special. You get access to our membership area, where you get access to our 3-step entry-exit method, the 6 ways the market moves. You get access to all of our training, including tomorrow's members-only focused training room. Remember, that's tomorrow. Access to the Hawkeye Inner Circle, which is our Skype chat room, which meets every single day. You also get a series of 2-hour on-demand training courses that focus on using the volume and the volume only, and how to apply that in your markets. Okay? www.hawkeyetraders.com. $97, one-time fee. There's no subscription, no monthly charges or anything. It's just a one-time fee, lifetime lifetime license. www.hawkeyetraders.com/WED. And I'll put that into the chat box there so you can click on it and pull that back in. So those of you who aren't started with Hawkeye Volume yet, take this and apply it to your current trading methodology and see if it doesn't help you gain the edge and to see where to take those. Because if you have a normal standard entry and if you see volume supporting that on triple time frames, it's going to help you to take that trade with a lot more confidence. A lot more confidence. All right, let me get that out of the way. And here we are again. So we're coming up on the 10 o'clock news. We got a request to look at the Euro New Zealand. So let me go over here and look at a time setup. The Euro Yen is the one I was looking at. I'm also looking at the Australian being extremely weak relative to that Euro. So an Aussie Euro, Euro Yen looks really nice, and you got the nice trend of the Pound Yen as well. So you want to see the New Zealand. Here's the New Zealand versus the Yen. The Yen's already trailing in weakness. The New Zealand is extremely weak relative to all of the other currencies, but this means it could potentially rally back. So let's look at that New Zealand Japanese Yen. Right now, it's currently in a neutral trend. So we can see there's a neutral trend, but this is based upon the 15-minute trend. These are based on 3, 6, and 12. So you can see the 3-minute has just broken, and you can see some news coming up into that. But let's pull this back in and put this back on a 15, a 30, and I don't know, let's make it a 5. Let's make that a 5, 15, 30, and a 30. That way we got 5, 15, 30, and a 60. So they're all perfectly harmonic of each other. Harmonic frequencies are important when you're setting these time frames. Triple time frame, I always have a 60-minute chart set up because the Hawkeye zones are like price magnets on a 60-minute chart. So I always have that set up there. So a 45-minute chart means we're trading the 15, so 15, 30, 60 would be the trade time frame of choice. Looking at this, we are definitely neutral, as we saw right here. Your New Zealand yen is a 4 neutral trend dots, but we can see that there's a consistent level of buying here coming up into this trend, but not enough to get us into this trade. You can see that if it does push to a 77.80, well, that puts us right back up into overhead resistance. So there's not a lot of upside potential on this. And unless you're trading this aggressively, then all this is a simple correction. You got to wait for it to break that because you're already in an existing downtrend. This is clearly congestion. Here's your congestion entrance. Well, here is 1, 2, 3. Right here is your pivot high. So this is your high and low congestion range. This then becomes a break of congestion to the long side. So any down trade, okay, has been canceled at that point, and now you're just looking for any initial signal to enter. So right here, right now, there's no real clear direction on where to go. Longer term, okay, you're still longer term long. Midterm, you are midterm short. And fast time frame, you are short. So you have mixed signals. You haven't completely confirmed. And what the fat man is telling you is that this New Zealand is still weak, but the yen is starting to weaken. And so we're waiting for that New Zealand to start to show signs that it's coming back to life. Haven't seen that yet. We can start looking at the faster time frames. So if we were to go down to a 30-minute, you can see the New Zealand is starting to come back up with strength. So based upon a 30-minute, if I look at a 15-minute, you can see that New Zealand has already come back to fair value, and it's happy to stay right here in that fair value range. You can see that the yen came from being oversold to fair value, and then now is coming back into an oversold condition. Oh, okay. So you want to look at the Euro New Zealand. Alrighty then, let's go back and do this again, and then this time let's look at the analysis of the Euro New Zealand. Okay. It's a great wide bar. Look at that thing. Wide bar. What's our wide bar rule? No trade immediately following wide bar because we know high probability that price is sucked back into the body of that wide bar. Okay, you can see that there's a very important range established there. And once that range is broken, the intent is to the long side. So it comes right back, tests it, and then you can see that there's a resulting trade that starts at that point. You can see that we are long 15 minutes, we are long 30 minutes, and we are long 60 minutes. Price target would be a 158. So looks like we're getting pretty close to that price target. Looking at a 5-minute, then that 5-minute also is long, but now it's entered back into congestion. It's gone short, but the trends is still in a sideways market right now. So right now we're still getting very close to the upside. Prior resistance has been strong, but we need to see that broken. We're seeing a lot of selling pressure coming into this, so we're not looking for a lot of upside on this because the euro right here was weakening at the same time that the New Zealand was weakening, but now you're starting to see the euro strength coming back. the New Zealand is weak. So let's go and look at some shorter time frames. You can see they're starting to trend the same direction, but the euro is still stronger. 15-minute. The euro has become overbought on a 15-minute time frame. We're starting to see some weakness of the euro, but the New Zealand has also paired off and is very happy to stay right here in fair value. So the euro New Zealand analysis is still, the euro is still stronger, but it's not in an ideal relationship right now to continue this upward move, because volume is sitting here telling us there's just too many sellers at this point to see if it's going to present itself. So this is not, in my mind, an ideal setup. And I think that there would be other trades out there that would look better. The radar screen showing us that there are potentials that are coming up right now. The Euro Canadian, you can see strength in the Euro, overbought Canadian. So a Euro Canadian short, in this case, just started. But if that's the case, if the Euro strength is coming in, you might or might not see that. That might be a corrective move, and it might be just turning. The Euro Yen. The Euro Yen looks like a nice cross pair here to be looking at potential for trading that. What is the 60-minute? The 60-minute is also showing it in a positive direction. So this looks like a potential trade to the long side for the Euro Yen, which is currently in a long trend. So that's my analysis and what Hawkeye says about the current setups for Euro New Zealand and so forth. It's just after 10 o'clock. The news has come out. Let's see if there were any impact on the markets. Let's go and look at real quick what the Dow Jones has done. Noise. What a mess. S&P 500 noise. What a mess. Midcap's the only one that's starting to show trending, but you can see that after the market had opened right here at 9:30, it rallied up to a point where we started to see buyers disappearing, saying sayonara, and then sellers stepping in and pointing the way. So you can see 1, 2, 3 price bars showing you that there's no more buyers in this market and selling is going to resume. So once you've got the first selling bar coming back in, very, very responsive volume, price action to that volume move. And then price came right back down to the lows. And it looks like the overnight lows at that. So we can see from our zones that we are punching through the low side of this zone. So punching through that zone now is going to take the support away and is going to put us into a new potential range. So you can see that there's a lot of black air right there, a lot of clear space down to 1715. So in this case, a punch through of this, which it is doing right now, will give us a downside target of about 1715.90 on this longer term. Looking at the other markets, you can see that they are topping and that they are all starting to turn, but the Nasdaq is way out of sync with the other markets. So the Nasdaq rallied strong this morning, but is starting to come off equally strong as well. See that? Nice big rally up and then boom, really weak, really weak. So it looks like the Nasdaq is really pushing the way this morning, and it looks like the other markets are going to be coming that way very soon. You can see downward pressure for the Nasdaq market again, just below 5,600, 5,590, and so forth. So look for that to continue, at least until you start to see volumes showing you a directional move to the opposite way. ES, yep, see it's neutral right now, but you can see it's the pressure of the weakness in the Nasdaq is already starting to come in. You can see they're already pulling together. The Dow, the S&P, the mid cap, they're all starting to pull together. This overall extreme weakness in the Nasdaq is just too big to ignore. So it's going to be pulling that back in. You can see gold There's a lot of weakness here in gold, so gold is starting to trend down as well. Crude oil, shorter term weakness is coming back up, but we've got crude oil inventories here in 20 minutes. So you can trade anytime you want, but make sure you're not trading in front of these big news events. The KISS is telling us that we are heavily biased towards selling activity right now. So right now we're really only looking to take sells in these markets until this environment changes. So only buy into this market on corrective moves, and shorter term, take profits early, but then you're looking for running on any longer term move. On the shorter term 60-minute, we are coming into shorter term support, but that is short term support. That support can be broken at a 23.77, and you can see that there's a 1 and 2 level support to get us back to where the Nasdaq would have already been in from the prior breakout that we had a couple of weeks ago. Is everyone following my analysis and how I'm looking at these markets? Putting the tools together, it's quite easy to see once you're used to them. It does take a little bit of time to adapt and to adjust to the tools, but once you understand what the tools are telling you, then you can just take that into account and just look at a single chart to help you to focus your trading and not be distracted by the other noise of the markets. I like a lot of information. All right, notice that we've got opposing volume coming in a price extension into a known demand region. See that? Buyers coming in. I wouldn't be surprised now if we started to see the other markets start to level out and take some corrective moves at this juncture. The Nasdaq is extremely weak, but now we're going to be seeing that weakness might be pausing at this point. We've got extremely large volume and a extremely large price bar. We've got wide bar on our 12 minutes, so we've got to watch for this to suck back in and be careful because you don't want to be taking initial entries on these very large price extensions. Wait for the price to correct back to the trend dot and look for a new entry point. Okay? So don't enter at the high risk point. Enter at the safe corrective point. Wait for price to correct back up, and then take the first break of that, just like we were showing you earlier when I was using the correction bars. When you can see price come back down and pull back up, then just use the correction bar to see how that correction goes. And when you see the first break with volume in the direction of the trade, then that is the continuation trades. And you can see Hawkeye's already showing you right here that is a continuation trade, as is the initial trade that was shown right here, showing you that trend, volume, and momentum all came in line and gave you the initial buy, this initial sell signal for this move right there. So if you were able to take that right at the market open, then this was the initial entry. This was your secondary entry right there. And this was your third entry right there. So any one of those could or would have gotten you into the trade, and then you manage the trade based upon your rules. And longer term targets are in place. Okay, you're welcome. Mark, yeah, the new Hawkeye Forex room is doing great. Marcus has a really great teaching style. A lot of people like his style, his instruction and training on the new Tomahawk tools. So you should give it a try. $47, you get a full month of try. You get to try the Forex room, and the nice thing about the Forex room is all the Tomahawk tools are included with your trial. So you get to, for $47, you get to try all of the new software. You get to apply those to see the training. You get access to all of the training videos and see if Hawkeye Tomahawk is for you. And if it is, then you would continue with a monthly subscription to the Tomahawk Room. Nasdaq, now you're starting to see a volume, opposing volume on a price extension bar, which is what I was telling you. Okay, watch for these things because then you're looking for those as the impetus for corrective moves. This is 1/2 of an isolated, a true isolated low. So if this bar closes, if it needs to close greater than the height of this bar right here. Let me expand that for you just a little bit. See that green bar? That purple bar to the right has to close, or the high of that bar has to be greater than the high of the green bar. And then that will become a true isolated low. A pivot point like this right here will paint on this bar, and then you can see that we will expect 3 to 5 price bars pushing back up to the trend line. So once we see price getting back into that, that's a much lower risk entry point to trade. Okay, overall target looks like this will continue. We are on a downward trend. We are in a confirmed downtrend. We are in a confirmed downtrend. Target would be about 50, what is that? 55.94.20 to the downside on the Nasdaq. But this is simply we're looking at this as a potential corrective move. We just need 2 more ticks to confirm this as a isolated low. If not, it could easily be a phantom low. Either way, we're still looking for this to be a corrective run back. And there, that just confirmed that that's going to be a true isolated low. There, just the pivot point right there. And price is pushing right back up to these trend lines. And so we're still in a confirmed trend run. And now we have a 6-minute volume bar, which is posting new price extension with opposing volume, and we've got volume coming back, showing that this Nasdaq is going to start coming back in line with the rest of the market, but the rest of the market is trying to play catch up as well. So you can see the decorrelation that we see in the Fat Boy gives us a lot of indication on the direction of those markets. So I want to make sure that you see and understand that. That plays out in any of the markets, whether you are looking at the Forex markets as well. You can see the Forex play out in those same areas. So the Aussie, I'm looking for that corrective move to come back in. So anything relative to the Australian dollar, I'm looking for that potentially to correct, because all that weakness is starting to come back with strength. And so if I can see anything else against that in that direction, then that would be some potential for trades. The euro looks like it's continuing to go strong. You can see that euro New Zealand has a potential to break, but watch out because we're coming up into overhead prior resistance level. So there's not a lot of profit to take if you were to take that on the long side. Intraday tick trading. And you can see that we are still clearly in a range bound. We're looking to take shorts, but any long moves are simply scalping and corrective in nature only. So be really, really careful. Crude oil inventory reports are coming out. Be real careful of that. So right now, everything is still just kind of setting itself up as being range bound. On the other hand, if we were to look at the longer term setups, then we can look for other potential trades here. You can see that Apple had really good news, obviously not as good as expectations, and so you can see it's down, what it said, about 1.5%, maybe 2% or so. But it's rallied down. It's starting to come right back up again. So if we look intraday, then you can see that we had a gap down, and we're starting to fill this gap now. based upon the news. The volume is still very much no demand, very neutral. I'm not seeing a lot of overall pressure. You can see that based upon the opening volume, that volume is trailing off. So you got rising price with declining volume, but now we're starting to see the buying volume is starting to raise above the trend, the downtrend. So this might be a potential gap fill measure where price can rally back to the target price of about 147 on that. So looking at intraday Apple moves to do that, the earnings coming out. We're looking at Facebook and other bigger names to be presenting their earnings this week as well. So always be watching out for those. This is good because protective puts, anytime you have earnings that come out, if you own these positions, as I do, then protective puts are always going to be helpful to place. And once those are safely released, then you can remove those and continue with the existing trade setups. Are there any other questions, especially for those who are here for the very first time? If you're looking at getting started with Hawkeye or Hawkeye volume, then the volume indicators are extremely useful tools to help you to use in your trading. So if you're applying the volume tools to your existing trade setups, then if you're using MACD, or if you're applying moving averages, where you can see the crossovers relative to a MACD signal. You got the value line in the crossover, and you can see where divergence or convergence begins or ends. Then you can see at which point the signal is, and when you can see volume supporting the signal move, then that's going to give you a lot more confidence to take that trade. Okay. Couple that with triple time frames, you can see the volume is supporting longer term moves, and that helps you to take those trades knowing that shorter and longer term volume is on your side. Again, the volume starter package includes all of these tools: the Hawkeye volume, volume paint bar, volume radar, pivots, and wide bars, all for 97 bucks. You can get started today with that. We normally sell that for $360 every day, but because you're in my trading room today, you can get that for 97. If you use this link, hawkeyetraders.com/WED Wednesday, WED will get you started on trading with Hawkeye volume and give you access to the full membership area. Marcel, is there a way to protect a Forex position, say, before the French election? I'm not sure. I don't think there are any options or any way of trading that unless you hedge it with another Forex position. But really, there's really no way to protect yourself because Forex can be a highly manipulated market. So I really don't know how to do that other than not being in the market at all. If it were me, I would make sure I was not in the market. That's just my 2 cents worth. Looks like we are on a path of gap fill, so watch for that fill right around 147 region on the Apple. Intraday, we are looking at the buying volume coming in on that Nasdaq to rally back up, and we're waiting to see that this extreme weakness in Nasdaq comes back in line. But you can see the S&P 500, the mid cap are all starting to race and rally back down to rescue this flailing Nasdaq, and the Dow Jones is the laggard in that. It's not being as responsive as the mid cap or the S&P are. So once they come back together, then you'll probably see an alignment of the market, and this usually happens every FOMC day anyway. So always be careful when you're looking at that. you're trading at gold. Looks like it's becoming extremely weak. We can see it as a very long trend of weakness in gold. So if we were to look at that gold, you can see that weakness now clearly symbolized by the price action here. And also you can see the current position gold. Well, 1245 is the low side. If we break that, we're headed for 43, possibly to even to 36 to the downside, because we are at brand new lows now, and it looks like we are continuing the overall trend of weakness. Okay, this trend of lower highs and lower lows, consolidation range, testing upper head support. You have a nice series of trailing supply zones, which is very indicative of a strong downtrend. Longer term gold, let's see what that is. Longer term gold, you can see that we are in a monthly corrective move where we were long term short. A correction on the monthly has pulled back to the Hawkeye stops. Now we can definitely see this is the breakout range. So a breakout above pivot or below this pivot will give us a consolidation. So we are long but congested on the monthly. We are long trend but pausing, okay, on the weekly, and we are currently corrective and just breaking into a short trend on the daily. So these are giving us some conflicted results, but we can see the fat boy is showing us clear trend of weakness, strength coming out of that after a nice double top, and we're coming into a region of being oversold. So we'll watch for that and to see if this will continue to break. So we can see that lower support is right here. The next region of support will then be right about there and then right about here. And we can confirm that by putting our zones on the chart, and you can see those exact same regions of support. So prices coming into this range, we got to see that hold. If not, then we would be looking at those as our eventual targets. So intraday downside trends are the trends to take based upon the current downside. Other questions? This is the Hawkeye Fat Boy, and this is the Hawkeye Kiss. These are filter tools that help bias us or help us to know the direction to trade in the markets. These are both, all these tools are included in the professional package. You can purchase them separately though, yes. If you go to the Hawkeye Traders website, there is a store menu item. Just click on the store and you'll be able to see the individual items at the bottom of the page. The comparison chart for the packages are at the top, and the individual tools can be purchased at the bottom. If you are already a current Hawkeye member, then many of these tools can be purchased at a really good discount, better than 25% or more in the membership area under the upgrade tab. All right, Dennis, if you are having some issues, then our tech support team will be more than glad to assist you. If you send an email to support@hawkeyetraders.com, then we'll be more than glad to help you with that error. The easiest way to correct that a lot of times is to reinstall the software. So download a fresh copy of the software from the membership area and reinstall it. And 9 times out of 10, that will correct any type of error messages that you are having. Otherwise, contact support@hawkeyetraders.com and we'll be more than glad to help get you going. You're very welcome. All right, there's the crude oil report. Let's see if we can get anything going on that. Woohoo! I always trade the 3-minute bar on news in crude oil. Okay. Crude oil has come out. They're saying they were expecting 3.3 million reduction. It came out much less, so it's not as weak as they say. They say the reduction in inventories is not as much as they expected. They're expecting a much larger. Previously, they had a very large reduction. Now they're looking for a larger reduction, but along the same lines, but it's not quite as large. So inventories are not going down as fast. Price supply is higher. Price is going to go down, and that's the overall reaction that they're looking at. They were expecting it to go down about a lot more, which was bolstering a higher price. But you can see the overall direction of crude oil recently has shown that there's been a lot of people in the know already knew that it was priced in. But any time it came to these higher levels, volume sold it back off again. You can see there was an overall trend of weakness that was existing. So now you can see that that came back out with a nice big wide bar down. We do not trade a price bar immediately following a wide bar. Keeps you safe. That's when we paint it purple and we identify that. And once that news bar paints itself, we wait 3 to 5 price bars, or that's the current price time. So about 15 to 30 minutes we have to wait before we take the trade. And then once we see a break above or below the break of the wide bar, then that's the trend that you want to look at trading. In this case, the news was down, so we're looking at the trend and the overall direction of the trade to potentially be down. So watch for this to correct, stabilize, and then give us a nice tradable signal. And once it does that, then you'd be safe to enter. And what are we looking at to the downside? Again, I think we looked at that, and we're looking at, I don't have enough data loaded on this chart, do I? Nope, I don't. So right now I don't see a downside target off of my hourly chart, but I did see it off of the intraday. All right, there's the close of the 3-minute bar. We are going to get wide bars on the 6 and the 12 as well. Now we're watching for price to suck back into the body of this wide bar, probably around 47.70 in this 60 to 70 range right in here. Stabilize and then potentially resume a downward trend. And usually the downward trends are going to dwarf the size of this bar historically. All right, that does it for me today. I've got another webinar to get ready for. I'm an invited trader and a guest speaker at the Market Fest that's going on right now over at Winvesting. So I'm going to be presenting about 1:45 this afternoon. Be more than glad if you came out to join me. Let me go ahead and stop the recording at this point.